If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Welcome back everyone for another Kaspa update. Nice to see that we are getting a pump out of here at the moment. If you remember from yesterday's video, we were essentially reviewing this previous double bottom trade that we gave for free on the channel here, and we met the technical target, which then actually broke us out of another double bottom, which was the title yesterday. So that's why you're seeing in today's title huge double bottom with a 25% target. The technical target out of this pattern comes from the neckline to the target, and we can see this is almost a 25% move going forward. Now we do actually have targets beyond that point, so we're going to completely surpass that, of course, but it's nice to see that at least we've got a pattern with a technical target, and then we've also got the Fibonacci's for further confluences. So going from that high to this low over here, we can see that once we break out of this range, we've got the 1414 at 17.5 cent and actual targets beyond that point all the way up at 23 cent, as you can see. So very exciting times ahead. I think that 23 cent target is a 65% move from this neckline, so that is what we could be expecting. Not only a 25% move, but the only pattern that has a technical target beyond this resistance point is that double bottom, and that target is of course 17.5 cent. So as long as we can break out and hold the neckline, which unfortunately in yesterday's video we said that we fell back underneath after meeting this previous double bottom target. Usually I would go ahead and say now this target to the upside is invalidated. However, there are more things at play over here. Look where the moving averages are sitting. It's all above this golden pocket. So once we topped out over here, we can see it's giving us retracement levels, and this is where we'd usually expect any crypto or any market to drop down to after a massive wave up. So this is usually the level that is fine to come down to for continuation higher, but as you can see with the moving averages, they're way above that point. So if we can just hold above this area, which was marked out in yesterday's video, I do it to help you guys, but essentially you don't need to draw it. That's what the whole point of the 20 and the 55 is. Another reason why I don't really use trend lines apart from technical targets or drawing out patterns is because you'll see right now, look at this 55. If I draw a trend line, you're just seeing that's what the 55 is there for. Essentially it's just it literally just is your trend line, and the 20 is an even shorter term trend line, just like this over here. Can you see that? So that's why I don't really use trend lines. My moving averages are moving trend lines. They stay closer to the chart for me. I just prefer them, and I'm just used to them. And then we can see that this whole area over here is support, pretty much between the 382 and 14 cent psychological level. So now that we've seen the reclaim of the 14 cent psychological level, the 20 moving average today on the 4-hour time frame, is it vital right now to continue to hold that level. So if we see that the daily candle close is above 14 cent, then we should be looking for the continuation to our technical target, because we're then confirming that key level as support. Again, you can fall through it and you'd be totally fine, but we're stalling off the process of getting up to that target, which is how we should be getting up there right now. So essentially, if you fall underneath this, you could still catch support within the golden pocket, reclaim all those levels, and then continue higher. So it just prolongs the inevitable, essentially. As long as we never lose the lowest point of the range, doesn't matter if we dump down into the golden pocket, it's inevitable that we go higher as long as we hold the range low. Of course, it could all go wrong, but I'm not seeing those signs at the moment. And what is beautiful is this dotted line is the support we've been saying for weeks on end that can't be lost as support. And now as we've been ranging, this has allowed the 200 EMA, this white moving average, to catch up with the range. Look, the longer we chilled out, look, it wasn't even in the screen. When we first entered this range, it was all the way down here. Let's get that price. So we entered in November, halfway through, and the price this was sitting at was 6.6 cent, and that's now pretty much double that at 11, almost double at 11.4 cent, and now above the dotted line where the lowest body close was. So we know that going forward, this would be our lowest point of support of the uptrend, and you can't go ahead and lose that. Otherwise we're changing the trend now. So you could even technically dump down all the way down there, and that would be your optimal entry point. I wish it comes. It's not a guarantee, guys, because again, all we really need to do is hold above the 20 and the 55, and that's like 3 cent higher. So It'd be nice to get down there for an optimal entry point. This would be the bottom of the uptrend on the 4-hour time frame, but it may never come, as if we continue to just hold the 20 and the 55 area of support, we're looking for the breakout technical target at 17.5 cent and eventual 23 cent to be met, which would be a 25 to 65% gain. Please don't forget to like, subscribe, comment, and share. I don't think I actually mentioned it earlier. Forgive me if I'm wrong. And if you want to get educated by myself, then use the links down below. Head over straight to the website to take action, or ask any questions on my Twitter. Links are down below. Cheers, everyone. I've got a whole bunch of educational content, and over here on the website, you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click take action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls, or if you want to take action on my 6-hour long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers.